Alrighty, so I attempted to do a live stream and didn't realize I was mute for halfway through. So I'm gonna do a trade recap, and it's gonna be kind of challenging because I didn't. Anyways, this is my trade recap for January 2nd. Um, I trade futures ES and NQ. I saw an SMT divergence here. Actually, and it's gonna get a little confusing, but it's the only way that I can accurately show what I'm doing. Let's go down to the 5 minute here. All right, so this is uh, right. This is Nasdaq. This is S&P. I saw an SMT divergence here where Nasdaq showed a higher high, but um, ES showed a slightly lower high. Did it? What? Oh, it's on a 30 minute. I'm like, it's kind of looking the same. 30 minute. I try to look at SMT divergences on the larger time frames because that gives me a better direction on what price wants to do. I still feel like it was definitely a difference. Unless I moved things around, I still feel like there was actually a difference. For sure, I recorded this and it's definitely showed that ES had a lower high and was forming a lower high, but NQ was forming a higher high. And because ES was forming a lower high, I knew that price was going to go downward, bearish, which was kind of my sentiment, though I thought price could either go up or down, just depending. So the reason why I thought bearish was because of this SMT. But if I take away this that's why, because both of these are the same. Just watch. Oh ho, right. Wait. Oh yeah. These lines confuse me. Right. This is clearly a difference now, right? So price makes a high or a swing high, whatever, and a higher high here. But at the same time, for Nasdaq, ES is making a high, but that makes a lower high. So SMT divergence is located here for me on a 30-minute time frame. So I now use that as like a second or third confirmation that I'm definitely going to be looking for price to go downward, but I'm willing to flow with whatever the market decides to give. And the reason why I'm willing to do that is because when I looked on the weekly, I think we were bullish on the weekly. On the daily, we were bullish, bearish, barely bullish. On the 4 hour, we were bearish. On the 1 hour, I think bearish. Yeah, if I'm looking from this point on, bearish. So I was like, we could go either way. Obviously, on the higher time frames, bullish. You take the higher time frames because it's stronger, but at the same time, I felt like we could go either way. And then another reason why I looked at bearish was because if I go down to the 5 minute and I look at my draws on liquidity, I look to see that there's a lot more for price to catch down here, like all these white lines. I look first to see if there are a lot of them, and I look to see if they are close to each other because it's like a magnet. If I want to take $5, price is $5 over here, and I want to buy something, do I want to use the $5 to buy one thing, or do I want to use $5 to buy 20 things? I want to use $5 to buy 20 things. So I want to use my money to grab as much as I can. And so price is going to be more magnetized down here than up here where we've got kind of some scantiness. And this is on the NASDAQ. Same thing on the ES. Price is just lower stack down here versus up here. It's a little on the scan. There's this space here and then you've got some up here. So I was like, bearish makes sense in this regard. And then when I look at the sessions and what they did, this is, let's look at, when I look at Asian session here, which I just mark it, but I don't really utilize it. I look to see that London session, it took out Asian high and made a new high, but it never like came back down. So that was another confluence to me to say, hey, prices wants to go down. Price wants to go down based on session movements. Price wants to go down based on S&T. Price wants to go down. Going in now for what? Price wants to go down because of all these prices pulling in. So cool, we're going to be bearish. But I went in too early. That's my problem. I'm still working on patience. I really am. It's a working process. And of course, when I work 12-hour shifts, sometimes I'm good to go and trade well, and other times I think I'm distracted. I think about a lot of other things. So here we are on, this is 5 minute. No, this is 30. Let's go down to the 5 minute. And here we are on the 5 minute. And this is the, what is this? This is pre-market session. And now this is main session, right? Right. So I have this here because I took price here, but clearly price did not do that, because I had waited for this fair value gap to be made. Now on ES, the fair value gap was made right here. It touched in on the 1 minute, and so I took it down where thinking it would go. Now my fault. This is my fault. This is all me. This is not a price thing or whatever. I went in earlier than I should have because this was 9:35. Had I waited for the macros, I would have seen that price was just calibrating or recalibrating, whichever one, and I would have seen this fair value gap made here on this candle at 10:10, and I would have taken this price down. It would have been smooth, 5K each account multiplied by 5. We made 25K right here, likely, most likely. But that's not the case. So I lost here, and then I actually end up losing some accounts, which it's hard to tell which ones. I end up losing some accounts because I had hit my max loss on the 50, and then I had like 3 other 100Ks, and I lost that. So I was like, you know what? Fine, I'm gonna stay out of the market. But I saw what happened. I saw that I entered in too early. I saw that price had hit this key level. I saw it coming down. And one thing I like about the strategy that I use is that you can see it everywhere, because I choose to look at it on the 5 minutes a lot of the times to make me feel like, okay, if something happens on the 5 minute, it's more guaranteed. If something happens on the 1 minute, it's weaker. It could shift directions a lot faster and a lot more often. So I like to look at price on the 5 minute, but realistically, if you looked at price on the 1 minute this entire time and said, okay, look, price opened up here and it did its thing. Okay, look, it went down here, and now I'm looking for a fair value gap. But you know what? Nope, I'm not gonna enter here because I'm gonna wait till 9:50. Okay, now I'm looking at 9:50, and I know I'm looking for bearish. So I'm basically gonna be looking for bearish, bearish fair value gap. Oh, I see a bearish fair value gap here. That's at 9:50 on the 1 minute. So I'm gonna draw this here. Okay, it gets invalidated right here when this candle closes. But hey, I've got this key level. Let me see if price is gonna reverse back and continue back in the same direction as the fair value gap, because that's what as the bearish sentiment, because that's what I'm expecting. And then I see, oh, here's a fair value gap formed on the 1 minute. It gets touched into on the 1 minute, closes out of on the 1 minute, and you could take this all the way down. This could have been a good, and I would have aimed while trailing my profits. I would have aimed down and kept my stop loss here. And that would have been a 1 to 5, because this red is another key level. Though these are lower time frame levels, this would have been ultimate, and it did hit. It did hit for both ES and NQ. So now what's happening? So what I did was I reopened some more of my accounts. I linked them again and traded. So I made 1.5 on each one, and I actually made 1.5 on, I want to say just 3 of them. So that was what is that? 4,500. The other ones are not open. So 4,500, but I definitely lost first. Definitely lost first. So now if one is interested in getting into a trade, we know that price has taken out this key level. So we're looking for price to show us that it wants to keep moving upward, and it has, because it's hard to navigate on this. This is not drawn well. If I draw my fair value gap from here to here, this is on the 1 minute time frame. I don't see any price really. I mean, this kind of barely touches it, but not really. Then I wait for another fair value. Well, I draw this fair value gap, but this price doesn't touch it. This one doesn't. So now I see one is formed here between these 3 candles. I draw this here. Then I see this candle, really massive, a lot of volume, closes above. I might realistically wait for another one, just because here it didn't technically close as well as I wanted. But at the same time, you have this other fair value gap beneath it that you could use to support, and then you could take this and you would aim, let's see, you would do a long, I would click here, I would aim, I would aim for this purple line, set my, just beneath that swing low, and that would be a 1 to 2.48. And that could be a trade. Now, would I enter in now? No, because the goal in trading is to be smart about how you do it. You don't have to be brilliant or anything. You just have to like figure out how to collect. It's just like, do you go to Target to buy milk, or do you go to HEB or Walmart to get milk? The smart thing is to go to HEB or Walmart to get milk, because Target and HEB or Walmart sell this exact same thing. Why would you go spend more money at Target? So here, the smartest time to enter into this particular trade after this key level has been reversed on, has been manipulated and reversed, and now there's a continuation happening, would have been to enter here. So now I'm 1, 2, 3, 4 minutes out of my window, and I'm going to be in this drawdown that's taking place. Had I entered in here on this large candle or on this candle, I would have some profit to support me, versus entering on here, there's no confidence. And this is another key level that you have to deal with. Price may be teetering around and making a decision. Does it want to go down? Does it want to go up before it moves in the direction it's looking to move in? So you have to be smart about it. You take your money and you place it where you need to do it, where you need to place it. I need to go to sleep. You take your money and you place it where you feel strategically it's going to make, you're going to get the biggest bang for your buck, essentially. I'm not going to get a big bang here. I'm just going to be in drawdown, and then my psyche is going to be messed up because I'm going to feel like, oh Lord, why did I enter? Why? When I would have entered here. And that's why I target key levels. I wait for price to show me something at these points, at these larger times, at this Asian time, at this London time. That's when significant moves are taking place. That's when the biggest, this looks so terrible. I'm going to drop down to one screen. Jesus. When price touches on this, I use a red line to signify Asia, and I use the blue line to signify London. And all these other lines here are higher time frame lines typically. Those are what I normally draw. And then when I enter into the trade, then I start drawing lower time frame, 5-minute time frames to give me an opportunity to figure out when I want to get out. So I'm always cautious. I try to be really cautious about these. When I see a price hit, this is where I focus. I'm not too concerned about these other prices. I also pay attention to what the previous day's high was, which I had drawn, but I took it out because price had clearly come into that area. So previous day high and previous day low. This was a previous day low. And even though NQ, I thought NQ took it out. One of them took it out. Oh yeah. ES took it out and reversed. Now NQ did not take it out and it reversed, which would have signified to me like, oh, NQ is saying we're going to start going upward, because it didn't have to come all the way down here, but ES did. That's my little form of SMT in a way, just my interpretation of the way price moves and interpreting, I don't know if it's technical analysis or price structuring. So yeah, I took an L, but then I ended up in a green, but obviously I spent some money to get back there because I had to pay to open up these accounts, and that's just the honest truth. As long as my strategy makes sense, I stick to it. So I could enter into 2 to 4 to 10 trades a day. It's not realistic. I'm going to sit in such like this where volume is not really moving, versus when I first entered into the trade, you have this nice movement. You could be in a trade for, this is on a 5-minute, you could have been in this trade for 5, 10, 15, 20 minutes and been done. Versus now you enter into this trade and you're like, okay, price wants to move or it doesn't want to move, or it's kind of moving, because now it's 10:47, we're out of that macro high volume, high volatility time frame. So as long as my strategy works, and my strategy constantly works, it proves every single time, then I just keep following it, and I put my psychology to the side. So one thing I know I did wrong was to enter at the wrong time, and it's my impatience that does it. This is me talking to myself. I'm not talking to anybody else. But if you can relate, cool. I entered in at the wrong time, and I paid for it. See, and I've already explained this, but I'm going to explain it again to myself, because I was still correct, if that makes sense. Because price went out of my window, but it still came back because my direction was price is going to go down. That was my price was my mentality was price is going to move down. That's what I've calculated, that's what I see. Now price had to go up. It wanted to take this out. That's its business. But I should have been patient enough to wait. So now I got stuck in this drawdown. This doesn't seem like a lot. This seems like, oh, it's not a big deal. It's not that much moves. If you understand how much money is in each tick move or each pip or handle, depending on if you trade forex or whatever, you'll understand that this is a difference between having an account and it being blown. So yeah, this definitely took out my accounts 100% because I moved in too early. This was not the strategy. This was my mentality, period. Now, my risk, I said in the stream that my risk was higher. I did have a higher, I did enter in with minis, but minis are not new to me. I understand the volatility of minis, which again is my fault because knowing how minis move, I should have again been patient enough to wait for macros because now price showed itself. It really did. And it was going to anyways. Had I put in for shorts and said, oh, what am I saying? I had entered, oh, I had actually seen it. Excuse me, I don't even know what I'm saying because this looks like I'm expecting a bullish um, play and I was expecting a bearish. I had seen here we go. I had seen fair value gap here. And so when the market opened and I saw price go down, yeah, this is what I'm talking about. Lord have mercy. This is where I saw price go down. I said, great, we're just gonna get in and ride with it. Clearly, price was not ready, and that's my fault because I went in earlier than I should have. Now, if I would have stayed in this trade, then the next question is how much money do you have to stay in a trade that's not going in your direction? How long can you stay in a trade that's not going in your direction? And this dark space here represents the trade not going in my direction, and the green is price going in my direction. So it's a lot of money that you spend and a lot of mental frustration you spend sitting in this drawdown, waiting for price to finally like go in your direction. That's why you wait. You don't go in too early. You wait until the right time period, which is like 9:50 to 10:30. You wait until that time frame. Then you wait um, for the thing to present itself, and then you go, okay, cool. Now I feel comfortable entering. And as we're speaking, see how price hit something over here, a key level, I guess. Yeah, and then it's now reversed back to this Asian session. Now, if I had entered into this trade up here, I would have been the profit the whole time. This would not be a good time to try and enter in when key levels are being hit and price is moving around and we're no longer in that 9:50, 10:30 window. So this is my lesson to myself. Patience, macros. Patience, macros. Patience, macros. Let's see what tomorrow looks like.